So I'm going to talk about the Fed rate cut. This is, and this is going to go along the line of why I think the average income went down. All right. What I did was I took from Fred this graph, and what it shows is as the Feds have cut rates historically all the way since 1955. Now, bear with me here. The shaded areas, this little gray bars here and here, indicates we had a U.S. recession. And I thought was kind of interesting. When the Feds cut the rate in 1953, we had a recession right afterwards. I wasn't even born yet. We had a rate cut in 1957. We had a recession. We had another recession with no Fed rate cut. That happens. We also had a Fed rate cut in 66 and no recession. Look at unemployment. This red graph here is unemployment numbers as a percentage. And you can see where these spikes happen. So I'm going to keep that in record. Then we had a rate cut in 1970, immediately followed by a recession and a spike of unemployment. We had a rate cut in 1973. I was born by now. And we had a recession. We had the double dip, 2 rate cuts in 80 and 81, and we had 2 recessions. It's called the double dip recession. You can see how high unemployment was then. We had a rate cut in 84, no recession. 1990, we had a recession. 1995, we didn't. 2000, we did. 2007, we definitely did. Much thicker recession. That was the big bubble crash. We had one in 2000. Couldn't call that a recession. Oh, I'm sorry. We did have a recession. We had a rate cut in 2019, had a very small recession. Of course, we know that's the COVID recession. And we just had another rate cut. So that means 10 out of 13 rate cuts indicates that we have had a recession. So 76% of the time the Feds cut the rate, unemployment has skyrocketed because you can see here every single recession, the unemployment skyrockets, skyrocket, 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 skyrocket. And we hit a recession because of that. Unemployment indicates recession, not a Fed rate cut. But Fed rate cut usually is an indicator that shows that unemployment is getting ready to spike. And we are on this little uptrend here. Here's what I found really interesting. When you take the 3 years, 66, 84, and 95, that the Fed cut rates and we didn't hit a recession. Something that was interesting about those years is that the year-over-year unemployment increase never hit higher than 4%. That means from one year to the next, when they did that rate cut, the unemployment had not upticked up more than 4%. But right now, and 10 out of 10 times that we have had a Fed rate cut and we've gone into recession, we had a year-over-year increase of unemployment of over 20% or more. Right now, last year to now, we went from 5.9 million unemployed to 7.1 million unemployed. That's a 21% increase. So will history repeat itself? Is this enough data to say that we might have a recession? I don't know. But it's interesting data to say that 10 out of 13 times the Feds make a rate cut, we crash. But 10 out of 10 times, and we are over 20% year over year, they've crashed. And right now we are at 21% year over year increase of unemployment. I thought that was interesting data. Does this mean a recession's coming? We don't know. But indicators are, historical indicators will show you that, right now we are 100% likely that we will, just based on the previous 10 times it's happened. 10 out of 10 has happened. So will this be 11 out of 11, or will this be it didn't crash. Look at that. I don't know. That we'll have to just see what happens, but I thought that was pretty interesting. And that might explain why average household income went down $2,000, because more people are collecting unemployment in Lee County. There's no way of tracking that. There is eventually, but I will not be able to sketch that data on a week-by-week or a month-by-month basis just yet. It is data I'm going to be searching for and trying to get, but I think that's interesting.